You're listening to the Real Estate Reality Show with E.J. Hawkins and Cortez M. Johnson, only on LA Talk Radio.
Thank you for tuning in to the all-new Real Estate Reality Show. I'm your host, E.J. Hawkins, here with my co-host, Mr. Cortez Johnson.
That's me.
That's right. How you doing, Mr. Johnson?
I'm doing fantastic.
That is good to know. So this show is based upon real estate. We're going to have a lot of topics throughout the show. We're going to have callers calling in. We're going to have guests on the show. And the object of the show is to provide real practical solutions and give you real estate advice and information that people have in the everyday world. I mean, so many times I've seen so many shows where I'll listen to them and they're giving information that I wouldn't use my darn self. So that's one of the reasons why we created the show. Today's show is we're talking about how to qualify for a loan. We get phone calls, text messages, emails. I'm sure you get countless text messages and emails, Mr. Johnson.
Text, email, Facebook, Twitter, smoke signal, you name it.
So that's the first topic we're going to tackle today. We're going to welcome everybody to call in, email us. You can call us at 818-570-5085. Again, that's 818-570-5085. So, Mr. Johnson.
Yes.
Tell me a little bit about yourself so we can jump right into this topic here.
I'm Cortez Johnson. I'm a mortgage banker, mortgage broker, and I specialize in financing.
That is good to hear. And I'm EJ. I've had 15 years of real estate, 15 years of doing real estate, actually. But enough about me. Let's jump into the topic here. So, Cortez, how does a person qualify for a loan? What documents do they need to get from point A to point B?
So, EJ, that is a multi-million-dollar question because people always ask, how do I qualify? So let's jump right into that answer. The first step in qualifying is to do a loan application.
Okay.
Okay, so you can go to my website.
What's your website?
www.loansbycortez.com.
Okay, so you lending your own money?
No.
Okay.
I don't have any money.
Okay.
No.
All
But
right.
go to Loans by Cortez, do the loan application. That's the first step.
Okay. So they go to loansbycortez.com. And then once they get to the website, what do they do next?
They can look at my, people, since I don't work for a big company, people always want to question me. So you can go and look up my license, my broker's license and my NMLS license. And then once you're satisfied with your research, you can click apply online to get started.
So I'm glad that you touched on that about in terms of, the big corporations, the Bank of Americas, the Wells Fargo's. So you're a mortgage broker.
And mortgage banker.
What is the difference between me going or someone going to a Bank of America or actually going to a mortgage banker such as yourself?
Excellent question. We have our own lines of credit that we do lend, and we sell it to the bigger company.
Got it.
And we're a mortgage banker. We have about 20 different companies, so not everybody's scenario is the same. So we're able to, some banks have niches, and we can go to that bank for that niche.
Got it. Okay, so they're on the website. They've read all the information on you. They're ready to move forward. What do they do next while they're on their website?
They click apply online.
Okay. And they apply online. What information are they going to need in hand?
So the most important information on the loan application is the personal information and the job information.
Got it.
Make sure that's filled out completely. And then on the loan application, it talks about your credit, your debt. It talks about how much money you have in the bank. You could just put basic stuff in there because I'm going to have that from your documents. But what I won't have is your personal info, your job info. But the other sections, I'll get it from your documents.
Okay, so they just need to fill out the basic information that they wouldn't that you wouldn't necessarily have.
Exactly.
Got it. Okay. So they went through that section. So what should they do to are there a certain amount of bank statements they should have? Is it 1 month, 2 months, or how does that work?
So I prepared a list of what is needed, and this is not my list.
Okay.
This is a list for any type of loan, whether it's FHA, VA, conventional, or jumbo.
Got it.
Okay, so the first set of documents are the paycheck stubs.
Okay.
So as a lender, we would need the last 30 days of paycheck stubs, and we need a clear copy of your paycheck stubs.
Okay, so I couldn't get the copy that I had it folded up in my back pocket that I got about 6 months ago and then fax that to you?
No.
Okay.
And then the next, now some people are retired, they have SSI income,
Right.
Some type of retirement income. If you have that type of income, we would need your award letter.
Okay.
Or a copy of your retirement income.
Got it.
If you don't have paycheck stubs.
Okay. What about for those individuals who are self-employed? Can they still qualify? Because I know, back in during the whole mortgage debacle, everyone was going stated income, claiming self-employment. Can a person qualify being self-employed now? What do they do?
They sure can.
Okay.
So for a self-employed person, we would need 2 years tax returns.
Okay.
To prove income. So now you brought up the stated income from the past. That's been abolished. And so now we must prove our income.
Okay, so I can't be a janitor and say I make $250,000 a year.
No.
Not happening. Okay.
Not happening.
All right.
So the next set of documents that's needed is a clear copy of your driver's license.
Okay.
Please don't fax it.
Do not fax it.
No, because it won't come out clear.
So you'll need a scan?
Scan it.
Copy?
Or mail it to me.
Okay.
Or drop it off at my office.
Okay.
We need, next, a copy of your Social Security card. Do not fax it.
Okay.
Okay? Now, you asked about bank statements. We need the last 2 months of your bank statements.
Last 2 months. So what if the individual has multiple accounts? So they have two separate accounts. One that they get their paycheck in, another one that they use for, discretionary funds, going to the store, going to the mall or something like that. So do you need both sets of statements or just the one that they get their paycheck into?
Good question. We need the one where the down payment funds are coming from.
Got it.
So wherever the down payment is coming from, we need that account. We don't need your account that has $20 in it and you haven't used it in 2 years.
Okay, so I'm glad you touched on that because something that I see with my clients all the time is that they, prior to them starting the purchase process, they want to know in terms of their down payment, should they keep the down payment in a specific account? Or I'll get a question, for instance, such as, my brother is loaning me the money. So should they get the money from their brother prior to hand, or is there what needs to happen?
Good question. One of the biggest mistakes that I see is that people have money at home.
Right.
That money cannot be used.
Okay.
That's because of the Patriot Act. So if you have money coming from somewhere else that's not in your account, the easiest fix is called a gift.
A gift.
Yes.
Okay.
And there's a form you fill out. We need a copy of the bank statement from that giftor.
Got it.
And then we can get past that.
Okay. Okay. So now you have the driver's license, Social Security card, bank statements, proof of funds, whether it be a gift letter or another bank statement showing that. What else is needed?
Okay. Now I want to touch on one last thing with the bank statements.
Okay.
That people try to, sometimes try to trick the underwriter. You cannot trick the underwriter.
Oh, now, what do you mean tricking the underwriter?
Okay, meaning you can't put in money, cash, and think that the underwriter won't catch it. Any deposits on your bank statements that's not from payroll must be addressed.
Really?
Yes.
So if my cousin Jimmy loaned me $30,000.
Yes.
Now, I don't know where Jimmy got the money from.
Right.
But Jimmy loaned me $30,000, and he gave it to me a few days ago. I can't just deposit that money into my bank account?
That's a no-no.
Okay. So I would need what if that actually happened?
You would need a gift letter from Jimmy
Okay.
with his bank statement proving that he had those funds in his account
Got it.
to use that $30,000.
Got it. Okay.
Okay. So now some people use funds from the 401k.
Okay.
So most people have Fidelity or some company such as Fidelity, and they go by quarter. So we need a copy of the 401k statement if that's where the down payment is coming from.
Okay.
Some people have a Roth IRA account or a thrift savings plan.
Got it.
So we need those accounts showing where the down payment is coming from.
Got it. Okay. So as I'm looking on the list here, so after they give you all that information, tax returns.
Right.
Big topic I always see, for instance, especially for self-employed people, they'll, their gross income will be $150,000.
Right.
But their adjusted gross income could be $50,000.
Right.
How does that work?
Good question. So for self-employed and W-2 people, we need 2 years tax returns.
Okay.
2013 and 2014.
Got it.
And to answer your question, you will be qualified on the amount of money that you paid taxes on. So if you made 150 but paid taxes on 50,000, you will be qualified on the 50,000.
Wow.
If you're self-employed.
Really?
So if you have all these write-offs, that's good in one way, but it's going to hurt you when you out to purchase a home.
So what do you suggest for someone who is self-employed? What do they, if they have that kind of income, how do they prepare themselves? I mean, because let's be honest, if you're making $150,000, more than likely the write-offs that you have on your taxes aren't all, for instance, if you're like, such as write-offs like going out to eat.
Right.
Or, phone bills or rent, like office rent or something like that. Those may not necessarily be expenses that are actualized for that specific month. They could be quarterly or something like that. So you may not pay that money every month. So let's just say that particular person is actually bringing in the household $10,000 a month. They still are going to qualify them based upon $50,000, even though they have more readily available cash on a daily basis.
Right, because basically, for self-employed people, we're going to average the income over a 2-year period.
Got it.
And if you have 2106 expenses, food, gas, car, office, cell phone bill, if you have all those write-offs that reduce your taxable income, that income cannot be used to qualify for your loan.
Got it. Okay. So tax returns, bank statements, they gave you your ID, social security card. What else is needed?
Okay, so next, one last thing we forgot about the tax returns.
Okay.
Some people have not done their taxes for 2014, so we would need a copy of your extension for your 2014 taxes.
Got it.
Which the time is up, I believe, in October.
Okay.
15th. And a copy of the check of the estimated taxes. But most people don't know they were supposed to send that check in.
Along with their extension form.
Yes.
Okay.
I learned that the hard way.
Okay, I'm sure
Yes.
most people don't know. So send in your extension form.
Yes.
Along with the check.
Yeah, a copy of the check that your estimated taxes.
Cashier's check, personal check.
Cashier's check, personal check, money order.
Okay.
Whatever you have.
So you have all that information, and the person is ready to move forward. What are the basics to getting the loan approved? Because they can turn in all that information and give it all to you, but credit score, there are other different factors that go into approving a loan. What are those?
Okay, so good question. So what I do that's a little different is that I take the time to run what's called Fannie Mae DU online.
Okay.
And I do that is because there's so many guidelines and rules. I don't know all the rules.
Right.
It's impossible. So what we do, we take the loan application plus the documents, and then we run DU. So people, like you said, they always say, what are the basics for getting approved?
Right.
Okay. Number one, we have to verify 2 years work history.
Okay.
Okay. Now there is an exception. Let's just say you were in college at UCLA and you were in the RN program, and now you're an RN and you've been an RN for 3 months right out of college.
Right.
You can still qualify without the 2-year work history.
Really?
Yes. Because you went to school to be an RN and now you're an RN and you can qualify.
Okay. So 2 years of work history. So all of this information is going to be verified
Yes.
throughout the loan approval process.
Oh, yes.
Okay. Now, this approval process is prior to them even finding a home, right?
Yes, because I don't like realtors getting mad at me.
So, as opposed to, so here's a question that I get all the time. I'll get someone that'll come to me and say, I've been pre-qualified for a loan for $500,000.
Right.
I want to go looking in Beverly Hills and buy a home. Can I find something for $500,000 with this pre-qualification? So what is the difference between a pre-qualification and a pre-approval?
The difference is a lot of the lenders, which I won't name, they will just run your credit, good credit score. Okay. They'll ask you what's your income.
Right.
And give you a pretty, nice and pretty approval letter.
Right.
But they didn't verify your income. They didn't look at your tax returns. They didn't look at your W-2s. They didn't run Fannie Mae DU.
Okay.
So we take the extra steps to run those documents to make sure you're approved.
Okay. So it's a much more detailed process.
It's a much more let me tell you, I have an example for you. I had a buyer that had an approval from a big bank. She had a good credit score in the 700 range.
Mm-hmm.
And then she had a pre-approval from the big bank. I ran her credit and took the time to actually look at her credit report, and she had a short sale less than 2 years ago.
So she couldn't buy.
No.
Wow. So I get that a lot. I just short sold my home a few years ago, or I was foreclosed on a few years ago. So how does that work with the approval process? Can they still get approved?
Oh, they can.
They can.
They can. So
Okay.
It depends on if they're going FHA or conventional, but the easiest one is FHA.
Okay. So credit score.
Right.
What is the optimal score that someone needs to purchase to get approved to purchase a home?
So the optimal minimum score is a 600. That's going FHA.
That's going FHA.
Yeah. Now I do have one lender that can go 580 or 550 credit score.
Right.
But that's called manual underwriting, and I don't like manual underwriting.
Why is that?
Because it's a whole nother set of rules. It's more difficult. The buyer might as well repair their credit and get a 600 credit score and go the regular route.
Okay. So 600 credit score.
Right.
So you can have a 600 credit score, but let's just say the person has a few lates
Right.
on their credit, or they have 1 or 2 trade lines. Does that matter? Is it just the score that they're looking at, or the actual history of the credit?
Excellent question. That's why I run the Fannie Mae.
Okay.
Because I don't know. Like basically, the Fannie Mae has a formula, and they run all these formulas on the credit report, credit score, the income, the history of that person. So it's things that I don't know. That's why it's important to run that online approval so you won't be surprised.
Got it. So realistically, in order to ensure that your chances are better for getting approved, they should have no lates, or if they do have lates, they should be what, 12 months old, 6 months old, or
Yeah. Yes. Basically, the better condition of the credit report, the better.
okay. So what other criteria do you guys need when you guys going through the loan approval process?
So the next thing is we must prove funds to close,
Got it.
so funds to close includes the down payment
Okay.
and the closing cost. Where is that money coming from? So we need those bank statements, or the 401k, or the Roth IRA, or the thrift savings plan, or the gift, showing where the funds to close are coming from.
Got it. So now, isn't that done in the beginning when they give you the bank statement? So at this point, you have the bank statements.
Right.
So now you guys are verifying
Yes.
those funds are on deposit.
Yes.
Okay, got it.
Yes.
So you got you verified the work history, you verified the funds to close, credit score is looking good. What else? What are the other criteria?
So the next thing that I like to prove from the beginning is that this homeowner will live in this property. Owner occupy.
Right.
And so what I do now, I just have the buyer write a letter, a motivation letter. I want to move in this house. It's close to my job. I have 2 kids and a wife, and this house will fit us perfectly. It's in the neighborhood I grew up in, or whatever.
Now, what if they're not buying a home for owner occupancy? It's a vacation home or a secondary home that they're buying, or an investment property.
Oh, well, then they won't need a motivation letter, and then they have to put the higher down payment.
Okay.
But this is for the lower down payment.
Okay. So when you say lower down payment, you're talking about what? 3.5% FHA,
Right.
5% conventional.
Right.
Okay. All right. So they've done that. What else?
So the next item is tax returns.
Okay.
Your taxes must be complete. Well, I should say up to date.
Up to date.
Up to date with the IRS.
Okay. Now, going back, I know you mentioned that if they haven't filed their taxes for the year and they've done an extension,
That's fine.
that's fine.
Right.
So that doesn't. So they, in terms of up to date, they would have at least have to have done that.
Right.
And then had their previous tax return. So for 2013, those would have to have been filed, correct?
Yes.
Okay.
But
All right.
but I've met some people that haven't filed taxes in a year or 2.
You kidding?
That's a no-no.
Hiding from the IRS.
Right. So you
Do not hide from the IRS because they
No.
will find you.
and you cannot buy a house.
You cannot buy a house. Trust me, I know. So, are there any other criteria that is needed when you're going through that loan approval process?
Well, this is a great start right here.
Okay. So they've gotten you all that stuff. They've given you everything. You've submitted it to the Fannie Mae DU approval.
Online.
The approval comes out. They get approved.
Yes.
Okay. So what determines what they qualify for in terms of how much house they can purchase?
Good question. Their income.
Their income.
Right. So one of the biggest things that I see with people are, they have a car payment, they have motorcycle payment, student loans, so all those debts, that's called debt to income ratio.
Okay.
So if you make $60,000, but then you have a car payment $500, a Honda Spree moped $200, that's $700 that's taken away from your buying power right there.
Wow.
So I recommend, I know it's hard, but I recommend people have less debt as possible.
Okay.
Less consumer debt as possible when you're buying a home.
So prior to, making the decision that you want to purchase a home, should they pay off some of their debt?
If they can.
If they can.
If they can. They should pay it off. And, honestly, I recommend people have less debt going into purchasing their home.
Okay.
Because when they buy the home, there's going to, their expenses will go up.
Okay.
So
you get the DU approval. You spit that out that you have what they qualify for, because I see this a lot as well also when I'm out there. So again, they qualify for $500,000, mortgage payment $3,500.
Right.
However, they only want to spend $3,000
on their mortgage.
on their mortgage.
Right.
So what do you do? Is that a conversation that you have with them about, because just because you qualify for $500,000 doesn't necessarily mean that they really want to spend that kind of money.
Right. So I will show them how much money they have to put down to get to the 300,000.
Got it. Okay. So you got the pre-approval. They spit it out. What do you do next?
So then I, email a congratulation email to the buyer and their realtor,
Okay.
and they're ready to go shopping.
Going shopping. So that's when you call me.
Yes.
So one of the things that I always do, and I know you have a conversation with the buyer once they get that approval letter in terms of what they can actually afford. At that point, you need a reality check, because most people don't really know, okay, so I have this approval letter. What can I buy with it? Where can I buy?
Right.
So one thing that I suggest that people do is that prior to you even purchasing, you should be familiar with
Right.
areas that you want to live in, the average cost of the home in those areas, and with the internet, all of this information is readily available. You can go to realtor.com. You can go to Truly, Zillow, a lot of these websites that you can go to, or you can definitely talk to your realtor, especially if you're in the process of trying to get that done. So I like to sit down and talk with the buyer and really give them a reality check, because you may have Beverly Hills dreams with Compton money.
That's true.
Right. I'm just keeping it real.
Right.
As the youngsters say. Okay.
Right.
So giving them a reality check and really talking about the difference between what their wants and needs are.
Right.
And if you know the area that you want to buy in, you kind of know what some of the, for instance, if you want to purchase in, I live in the Valley.
Right.
So Woodland Hills, those homes they're all very typical in terms of their layouts and the square footage,
Right.
and the lots and things of that nature. So you have an idea of what you're getting into before you even purchase it. So you wouldn't go into a situation, in Woodland Hills and say, oh, well, I want a acre of land and I want a 3-story house, because the odds are those types of homes may not exist in that particular area. But let's talk about another area that those homes may exist in.
Right.
So those are some of the things that I like to touch on once you spit out that pre-approval letter, just to kind of bring them
Right.
back down and kind of and provide them with enough information so they can make an informed decision. So you got all that good stuff. Your buyer is out. Your buyer is in the process of going out to look with their realtor. So, well, let me back up, because you touched on something that I kind of wanted to elaborate on. Short sales, foreclosures, bankruptcies. You had a short sale a few years ago, or
Right.
you had a foreclosure or a bankruptcy. You'll hear some lenders or some people say, "Oh, you can't buy a home for X amount of years."
Right.
Is that true? And can you? How does that process work?
So the reason why that I work as a mortgage banker and a mortgage broker, because I have more flexibility.
Got it.
Because some of the bigger companies add more guidelines to the rules,
Got it.
right? So for an example, let's just say you want to qualify. So you have FHA and you have conventional.
Looks like we got a caller calling in. Let's
Okay.
take this call.
Okay.
Thank you for calling in to the Real Estate Reality Show. And what can we do for you here?
Are they going to be taking questions online?
Yes, we are. We're taking questions right now.
Okay.
What's your name and where are you calling from? All right. I guess that person hung up. So go ahead, Mr. Johnson. And
Right. So because of the last real estate bubble, the 2007, 2008, 2009, some people had foreclosures, short sales, bankruptcy,
got it.
right? So because of that, there's all these rules and guidelines. And so how we work, we go by the guidelines that Fannie Mae, Freddie Mac, and FHA, what they say. We don't add anything to those rules.
Got it.
So The easiest way is an FHA loan.
Okay. Looks like we have another caller calling in.
Okay.
Caller, thank you for calling in to the Real Estate Reality Show. You're on with EJ and Cortez. Where are you calling from and what's your name?
Hi, this is Tiffany. I'm calling from Los Angeles.
Okay. How you doing, Tiffany? What's your question for today?
Hi, I was just wondering, I'm a first-time home buyer, and I have absolutely no clue what to do. I mean, what do I need to do to get prepared to buy a home?
Okay. So I know, Cortez, you touched on that a little bit, so I'll go ahead and let you answer that question for her.
So hi, Tiffany. How are you today?
I'm good. How are you?
Oh, I'm just doing fantastic. So we just went over the items needed to qualify for a loan. So the first step, you can go to my website. It's www.loansbycortez.com. And I have a list of all the documents needed for approval, and you can apply online. But to answer your question right now, we would need your last 30 days of pay stubs. Tiffany, are you employed?
Good question.
Yes, I am employed. I have a job, yes.
Okay. And we would need a copy of your pay stubs, a copy of your driver's license, social security card, 2 months bank statements, all pages, and 2013, 2014 W-2s, and 2013, 2014 federal tax returns.
Well, the thing I was concerned about is, what about my credit? I mean, when I was in college, I used a lot of credit cards, and I paid off some of them, and some of them I don't know if I don't know what happened. I mean, I was broke like every college student coming out of college, and some of them I didn't pay. So, I mean, what are you guys looking for from a FICO score requirement?
Excellent question. For FHA, we can go down to a 600 credit score.
Okay, what's FHA?
FHA is a type of financing through the
Federal Housing Authority.
Yeah, from the United States government. So they have the easiest flexible guidelines. So it's my job to figure out which route you can go. Is it FHA or is it conventional? But I'll figure that part out for you.
Okay, how much down payment would I need for an FHA loan?
3.5% of the purchase price.
Okay. And what does my FICO score need to be for that? Because I could probably go on like myfreecreditreport.com and figure it out.
Oh, please don't do that.
Why not?
Why not?
Because that is a consumer credit report. So lenders run a lender credit report, and it has different formulas. So I can run your credit report and email it to you in less than 5 minutes, and I can go over the credit report with you.
Okay, so do you know what my FICO score what the requirement would be for me to get an FHA loan?
Yes, so you have 3 credit scores. So we go by the middle credit score, and it has to be at least a 600.
Oh, okay. Okay, that's what I wanted to know. I think I probably have at least a 600. So, okay, well, that sounds good. I'll go ahead and apply on your website. What is it? One more time, I forgot to write it down.
Okay, it's www.loans, LOANSBY.
I'm sure she can spell, Mr. Johnson.
Oh, sorry, Tiffany. It's www.
No. Spell it out for me because I want to make sure I don't get anything incorrect.
Okay, it's LOANSBYCORTEZ.com. Loansbycortez.com.
Okay, I got it. Okay, guys, thanks so much for being so informative. I'm going to go on your website right now and fill it out.
Thank you, Tiffany.
All right, thanks for calling in, Tiffany.
All right, have a good day.
You too. Okay.
So, good call in, by the way. I mean, in terms of the questions that she was asking, because that's all relevant. Those are things that people want to know.
Those are the same exact questions I get every day.
All the time. I try not to answer those questions. I always try to direct those questions to a lender.
I appreciate that.
Right, because me and financing don't mix.
Right.
I find the real estate, you do the loans.
Yes.
Okay, so back on the topic in terms of short sale, foreclosure, and bankruptcy.
Right.
So those are all three different, completely different scenarios.
Right.
So are the requirements different in terms of a person qualifying, whether it be a short sale, foreclosure, or bankruptcy, or is there a standard for instance, should the bankruptcy or the short sale be more than 2 years old or more than 3 years old?
Good question. So what I always do, I have access to about 20 different lenders, and they send me emails all the time. And because I can't keep up with the rules.
Right.
It's just too many. So I recently printed this one today. So let's just start with FHA, because that's the more flexible, the more easier type of financing.
Okay, hold that thought. We got another caller calling in.
Okay.
Caller, thank you for calling in to the Real Estate Reality Show. Where are you from and what's your name?
My name is Lester. I'm from Inglewood.
How you doing, Lester? What's your question?
I had a foreclosure on my credit record back in 2010. I want to buy a home for $500,000. I have $100,000 to put down. My credit score is about 610. I'm self-employed and I make $7,500 a month. Are you guys able to help me?
Yes. So for me to properly give you an answer, I would need a loan application and your documents to make an informed decision. But it sounds like we can help you. Because Lester?
Lester? Hello?
Sounds like he hung up.
Lester just put us on hold? All right, let's figure out how to...
Hello, Lester?
Hello?
Oh, I'm sorry. Can you hear me?
Yes.
Yes.
Go ahead, Lester.
Okay.
What, are you still there?
Yes,
Yes.
yes, sir.
Okay, you answered my question.
Okay, thank you.
Thank you.
Thank you.
You're welcome. So,
Lester has a bootleg phone. I just want to...
yeah, I see.
Right.
So for FHA, if you have a short sale, you have to wait 3 years from the completion of that short sale.
Okay.
With FHA. But
So at a minimum, the short sale has to have been done or completed by 2012.
yes.
Okay.
Excellent question. Yes. Now for conventional, it's a little different. For conventional, it can be as low as 2 years, but there has to be 80% equity when you buy the property.
What do you mean?
Okay, good. So you have to put down at least 20%.
So at least 20%.
Right. So FHA is the easiest one if you have a short sale 3 years or less. But going back to conventional, if you don't have the 20% down, you have to wait 7 years.
Okay.
So conventional is 7 years unless you have 20% down.
Okay.
FHA is 3 years. That's for a short sale.
And that's 3.5% down.
Yes.
Okay. What about a bankruptcy?
Good question. So for a bankruptcy, FHA is 2 years from discharge, from the discharge date,
Okay.
right? And of course, you have to reestablish your credit, etc.
Okay. So that all sounds good in terms of short sale, foreclosure, and bankruptcy. But what is the reality of that person getting approved if they have all that, if they have these things on their credit? I mean, what is the likelihood to do is there a certain credit? Do they have to have a higher credit score? Should they be prepared to have, I know you said at least 20% down.
Oh, well, that's if it's only 2 years for conventional.
So only if it's 2 years for conventional. But in terms of their credit, should their credit score be at a specific number, or can it be the minimum 600?
So for FHA, it can be as low as 600.
Okay.
But for
with the short sale or the
Yes.
foreclosure or the bankruptcy.
Yes. So hopefully people are reestablishing their credit. They're working on getting their credit higher, working on their credit report. For conventional, the minimum credit score, I can go down to a 640. So I do have lenders that will do a 640 with conventional. So you see the difference. Conventional, minimum 640.
You're right.
FHA, minimum 600.
Got it. Okay. So, question. In terms of, I did a short sale. One of the things about this show is that, why we call it the Real Estate Reality Show is because we're bringing real practical information and advice that we're giving you guys, and these are things that we've actually been through ourselves.
Right.
So the reality is, I did a short sale myself several years ago.
Right.
Or I've had family members who have been foreclosed on,
Right.
and things of that nature. Or I've had properties that I've owned
Right.
that I've been foreclosed on in the past. So you mentioned reestablishing their
Yes.
credit. So you've had this short sale, you've had this foreclosure on your credit. What do you do to reestablish your credit after you've been through something like that?
So I had the opportunity to work during the big bubble burst and the crash. I stopped doing real estate and I worked for a nonprofit, and I was a housing counselor.
Okay.
And I processed loan modifications. And what I noticed is that some people kept their car payments and their credit cards good and let the house go and start missing payments with the house. That's category A.
Okay.
But then category B, I met people where they kept the house payments up but let the cars and the credit cards go.
Okay.
Category B. So category B people have low scores.
Even though they're probably the largest liability on their credit,
Right.
is their mortgage payment.
Yes, because they may have had 5 credit cards, car payment. So there was more trade lines.
Got it. That are affected.
Yeah, versus that one. So after the short sale, the foreclosure, the bankruptcy, hopefully people maybe got a secured credit card.
Okay.
And reestablished their credit. Maybe got a car loan. Making payments on time, because the credit gets better over time.
Right.
When you make the on-time payments.
Okay. So there is life after the
yes.
foreclosure and the short sale. And
Life
the
is
bankruptcy.
not over. Yes.
Okay. Okay.
Yeah.
So they went through that process. They have the loan approval. They've found a home.
Oh, but you asked a good question earlier.
Okay.
About
Talk
the,
to me.
about the if they have a short sale and the credit score. So we run them through DU
Again.
Yes, we run everybody through the Fannie Mae DU because that catches things that I don't know.
Okay.
So I literally ran a client last week who had a short sale, and the DU said, "Oh, he'll be ready in October of 2015." That's when his 3 years are up.
Oh, really?
Yes, I had another person that gave me a fake Social Security number.
What?
Yes.
A fake Social Security number.
Well, it was a tax ID number,
Oh, okay.
but
For a business that he did not own.
yeah, like you could trick me, but you can't trick the computer.
or the government for that.
Right.
Because that when you run it through DU, Fannie Mae is a government-owned agency.
Yes, it is.
Okay.
Yes, it is.
Okay. So you ran them for a second time through the DU approval process. Here's a question that as a matter of fact, we had a scenario where we had a client, we were in escrow. You probably remember this. They were buying a house, and the first thing that people want to do is, I want to buy furniture for the house. I want to go out and buy a car. I want to buy a couch. I saw this car. I want to get a new car to pull it in my new driveway.
Right.
Do you even recommend that?
So that brings us to our next section.
Okay. So you already had this. You already had this on here.
Yeah.
Okay.
So the next section, and this is all on my website, by the way.
Okay.
All these items. There's a link that says PDF downloads.
Okay.
This is all on the PDF downloads tab.
Got it.
So the next section is tips for a successful and less stressful process. So the answer is no. Once you're looking for a house and you're in escrow, don't do anything that you just said. What did you just say?
I want to buy a car.
Oh, yeah.
I want to go get financing so I can get that new couch
Right.
and TV that I saw at Rent-A-Center.
Right.
Okay.
and let me tell you, I just closed the refinance where refinance is when you already own a house and you want to get a lower payment. So,
Got it.
So this is a past client, and we were doing a refinance to lower their interest rate and lower their payment.
Okay.
And right before they signed loan docs, the Sunday before, they purchased a new car.
Wow.
And they honestly didn't think about it, that I'm doing a refinance. So the bottom line is, even though the credit report that we had did not have that new car, the lenders and banks do a credit monitoring.
While you're in the escrow process?
Yes.
Okay.
If a new inquiry pops up, they see it. And so we had to disclose, they bought this new car, and it didn't affect us, but
Now that affects you mentioned this previously, their debt to income ratio, right?
So with this particular refinance, it was called an FHA streamline.
Okay.
So they don't do the debt to income ratio for those.
Before a purchase.
But for a purchase, it definitely will affect you.
Okay, so no new cars.
No new cars.
No purchase, no financing any furniture or anything like that. Now, what about, so let's just say when you first got them pre-approved, they had $50,000 in the bank.
Right.
However, only $30,000 is needed for their down payment and our closing costs.
Right. And
they made some purchases while in escrow. They didn't get any financing, but now let's just say, as opposed to having $50,000 in the bank, they have $45,000. Does that affect the approval process?
Good question. It doesn't, as long as they have the down payment amount,
okay,
and the closing cost amount to close.
Got it. Okay. So they've gone through that process. They get pre-approved. So you get the pre-approval process, which is in the initial phases.
Right.
You're going through the escrow process, and now you have the loan approval process. So once you get loan approval, and they did not do all these things that you had. They didn't buy the car. They didn't get any financing for anything, and they get approved a second time. What happens after that?
Good question. So then that's when we get into what's called approval from the underwriter, from the human.
Okay.
Underwriter, approval with loan conditions.
Okay. And those conditions could be
just random things like why did you let's see here.
Bank statements.
Well, they might say, give us updated bank statements, give us updated pay stubs, get us a verification of employment.
Okay.
It's different random things. So each person has different. See, the underwriter literally looks at your profile, and whatever you're doing, they're going to find it.
Got it.
So the more conditions that you have, the more items the underwriter has about you.
Got it.
The least conditions that you have, that means the underwriter says, "Oh, you're A-OK."
So you're A-OK. so you have a few conditions. So now, prior to closing on the property and being the owner,
right,
those conditions have to be completed prior
Yes.
to closing on the property.
Yes.
Okay. And now, and I guess I'll probably leave this for another topic, but they have to provide all that information, and it has to be reviewed by the underwriter, I'm assuming.
So, good question. So all the documents that I asked for up front, the loan application, the documents, and the Fannie Mae DU,
Right.
we give all of that to the human underwriter.
Got it. And the human underwriter spits out another, or they just review the information.
They make sure I did my job.
Got it.
They make sure I did what I'm supposed to do.
So you got to make sure you were on the ball.
Right.
And you did your job.
Yes.
Okay. So, these are things that you'll run across in the approval process on how to qualify for a home. We'll have other shows where we'll have on next week's show, we'll talk about, the differences between a FHA loan and a VA loan or a conventional loan, and how does that affect the approval process, or how does that affect the process of purchasing a home? So we're going to also take calls and emails, and we'll give you guys all that information. So we want you guys suggestions on shows and information that we can provide you guys, because at the end of the day, we want to be a resource of information for everybody out there and provide everyone with as much information as we can. It looks like we're going to be wrapping up the show soon. I thank you, Mr. Johnson, for bringing all that information in. Really appreciate it. One of the things that I also definitely want to touch upon is that again, what's your website again?
www.loansbycortez.com.
Loansbycortez.com. Make sure you go to loansbycortez.com. If you have any questions or anything like that, feel free to email us at realestaterealityshow@gmail.com. Again, that's realestaterealityshow@gmail.com. Email us your questions or anything like that, and we'll definitely respond and get those answered on air if need be. I thank everyone who called in today. I really appreciate that. But was there anything else you wanted to add, Mr. Johnson?
I just want to say thanks as well.
Okay. All right. Well, that wraps up our show for today, everybody. We thank you for tuning in to the Real Estate Reality Show. We'll see you guys again next Sunday. We're on every Sunday from 6 p.m. to 7 p.m. And thanks again.
Thank you.
You're listening to the Real Estate Reality Show with EJ Hawkins and Cortez M. Johnson. Only on LA Talk Radio.